Rejoining us now, Matt Bennett and Brian Grete. Matt, as we look up coming next week, we have grain stocks report, we have the acreage report from USDA. Do you think either of those could be a big market mover? And where does agmarket.net stand right now on planted acreage?
Yeah, on planted acreage, the March numbers, of course, around 92. We're going to come in a little bit below that. Not a whole lot. 91.85 is where we're at. We kind of threw those acres over towards beans. We feel like the total acreage is going to be robust, as the USDA indicated. I think that this spring certainly necessitated that would happen. And so, of course, we took our bean number up to, the 87.65. And so, with that being the case, I've got to think a couple of things come to mind. I do think that you'll have double crop acreage that'll be pretty strong. And I think where we see that little shift in acreage is maybe mostly in North Dakota. We know that cropland in the ground late there, prevent plant probably didn't come into play as much as maybe just some switching of acreage. But that's where we come into play. And as far as the report goes, I agree with Brian. I absolutely think that they will make an adjustment on yield. I think they're a little high to begin with at 181.5. And given crop conditions going into the end of the month, unless we just see a massive rain event over the next few days, I think that as of July 1, it's going to be pretty tough to convince me or the USDA that you need to do anything other than at least drop maybe 3 to 4 bushels on this July report.
So, Brian, heading into next week, do you think kind of the acreage report that it won't be a huge market mover?
Well, I think that the grain stocks has a history of being the data that moves markets the most. And so unless there's some sort of major acreage surprise, which we aren't anticipating, but unless that happens, I think the June 1 grain stocks will be the one that has the potential to move the market. Now, with that said, there has to be a major surprise there too, because weather is the primary focus right now, and that'll remain the case unless we do see some surprises.
Brian, it's no secret that demand is in trouble on both corn and soybeans. We've been talking about that. How big of a drop would we need to see in U.S. production to make up for the declining exports that we've seen on the books?
Well, you're talking about new crop now, and so the situation with the exports is an old crop situation. Now it carries over from year to year, obviously, but I think if you start lopping some bushels off with the yield and things like that, it doesn't take long to get the balance sheets quite a bit different looking than what they are currently. And so that will be a focus as we move forward, especially if USDA cuts the yield like we anticipate that they will.
Yeah, Matt, is that something you agree with?
Yeah, I believe so. When you look at this export situation, it is very concerning to see that our new crop exports are running as poorly as what they are, both corn and beans. You start looking at the balance sheet, and obviously a 181.5 gives you awfully lofty numbers as far as where your carryout could be. Again, I got to think that we're going to drop down closer to maybe an all-time record yield of a 177, which still seems plenty rich. But let's face it, it's July, so it's early. And as Brian indicated earlier, sometimes you can kind of go too far and then turn around and have to go higher again. So I don't expect the USDA to just go all in on some sort of a massive yield cut. But whenever you start throwing in a 177, it changes the balance sheet somewhat. Obviously, feed usage numbers are going to be maybe not as robust as we've enjoyed the last few years, especially with cattle numbers where they're at. And then, of course, ethanol is trying to catch up a little bit as far as this old crop situation is concerned. Moving forward in the new crop, I've got to think we're going to stay fairly steady. But I do think as long as we have a decent crop whatsoever, it's going to be hard to keep your carry in that 2 billion and below range. If it's all full on drought like we're kind of looking at right now, all bets are off as to what that might look like.
Well, speaking of demand and speaking of ethanol, you look at the RFS this week, Brian. Soybean oil made a sudden move, limit down. Why did the soybean oil market not like the kind of the leaks of the RFS and what it could mean?
Well, you have to dial back the calendar a full year, and at this time last year, the market really started to take off, soy oil that is, and it was driven by a lot of speculation that renewable diesel would just explode and that the RFS would be much higher. The proposals that came out from EPA in December were disappointing, and then the numbers this week were also disappointing, and so you've seen the air come out of the proverbial balloon, so to speak, and I think that market now, it has to find its footing, has to figure out what the real value is. And we've just seen extreme speculative money flow in that market, to the upside initially a year ago, and now to the downside.
Real quick, Brian, why haven't we seen renewable diesel take off like some had anticipated?
Well, the capacity is growing. The problem is that with the RFS levels, you can somewhat constrain investment in that industry, and if you do that, then you hold it back. Keep it kind of tethered, so to speak. So I think that is the major concern, is what it does to the investment and the capacity that would drive moving forward as we move through 2023 out into 2025 at the end of the RFS mandates.
Brian, Matt, thank you so much. We talked about acreage, cotton acres. That's a big question mark right now, especially for Texas. Some of those areas that just got hammered with rainfall. We're off to Texas to look at the potential acreage picture there, coming up next.